Making news today, and before I begin, I am going to just apologise in advance. I am not normally one for fear-mongering, and I try to stay positive because, well, up until recently, I have thought that negativity is what crashes markets more so than actual economic conditions. But I'm actually starting to get a little bit concerned, and this is the first time I've ever admitted this, and it's actually quite a big thing for me to go through. But is it just me, or does anybody else feel it? Does it feel like we're on the brink of economic collapse? Here are 15 signs that we may be on the brink of economic collapse, some of which are based on actual economic data. Others are just feelings that I've got, and I'll explain to you in no particular order, so this will just be me rattling off my thoughts. We are on the end of a bull run. A bull run is usually denoted by several years of double-digit growth in the stock market. Another word for bull run is bubble. Bubble is when we have what we call overpricing of assets, i.e. the prices are going up because people are investing into stocks, but the actual value, the underlying value, the tangible, the intrinsic value is not actually there. So therefore, when people start selling the stocks, the prices go down. Before every financial crisis that we've ever had, we've always had this amazing bull run. Well, I'm telling you right now, we've had a bull run that's been going for the last 5 or 6 years. So we've pretty much bounced back from the last global financial crisis with some serious bull run activity. These are definitely signs of a potential stock market bubble. The market is extremely volatile. I mean, I sort of downplayed it over the last few months, but it appears that every week or two we're having these amazing, 3 to 5% swings in either direction. Say what you will about that, and I know that there are different forces causing this volatility, but one thing is for sure, there has been a lot of volatility before every financial crisis in history. Is this history repeating itself? Tech stocks are down. With everything that's been going on, tech stocks have been thought to be the solid investment option because of the world's ongoing requirement for technology. We would have thought that as our dependence on technology and the internet increases, which it undoubtedly is, our stocks invested in tech companies will be safe. Well, that's not showing to be the case. Despite the dependence on this technology, tech stocks are actually starting to move in a very interesting direction, i.e. down. People are rapidly losing confidence in the banking sector. Now, a lot of the stuff that I'm telling you about is going to be more American and global based, but even here in Australia, people are just losing confidence in banking, and that's a really bad sign because historically the Australian Big Four banks have been the biggest companies in Australia, and therefore represent a huge amount of our economy and what people's superannuation funds are invested in. If people lose confidence in the banks and the bank stocks crash, then we're going to have serious economic problems. There are some other interesting statistics. We have record shop closures in both Australia and America. One of our biggest retailers, Myer, is in big trouble. We may lose Myer. When people are starting to lose their disposable income to spend on luxury items, it means that people are really showing signs that they are in financial stress. This is further backed up by the reality that we have record personal bankruptcies. So more people than ever are actually finding themselves in a position where they simply cannot afford to pay their debts. So going bankrupt, and therefore when you go bankrupt, you don't have to pay your debt off anymore. It gets forgiven. It should be a worst case scenario though, because you basically can't borrow money or take a credit card, or in some cases you can't even go to a different country for 7 years. So that's the the negative side of being bankrupt. So it should always be a worst case scenario. Going back globally again, we have record global debt. $233 trillion is what the world owes one another. This is up $16 trillion from the previous year. I mean, this is a lot of money. And it sort of gets me thinking, how can global debt increase? Well, the only way global debt can increase is if the governments of the world are printing money, more money than they're actually repaying. Therefore, the value of money has seriously got to start dropping, given everything is valued in terms of money. Does that mean that perhaps the global financial crisis is on our doorstep? The major economies of the world have record low interest rates. In fact, just yesterday, Australia announced that they're keeping the official cash rate at 1.5%. This has been the longest and lowest interest rates in history. Now, just to give you a bit of background on interest rates, the reason why the government keeps interest rates low is to try to incentivize borrowing for economic growth. Well, that hasn't happened either, because we also have record low GDP growth. I spoke about gross domestic product in a previous thing. Basically, despite the government's efforts to stimulate the economy with low interest rates and therefore cheap credit, record low growth was achieved as a result. On top of that, we have the highest ever default rate on corporate debt. So that's companies borrowing money, even big companies, are struggling to make repayments. That's a really, really bad sign, because companies are what employ people, and therefore if companies go under, there are no jobs, and that is definitely not a good sign for the economy. We have, just in the last 10 years, we have 7 countries that have become on the brink of bankruptcy. The more commonly known ones are Greece and Argentina. Basically, they have gone into default on a lot of their loans. But it's seriously a big deal when a whole country goes bankrupt. So 7 new countries in the last 10 years are on the brink of bankruptcy. That can't be a good sign. Now, we thought that the growth juggernaut of the world, being China, is propping up the overall global economy, and we thought global being the biggest financial superpower currently in the world, there was some place for optimism there. That's not necessarily the case. In fact, China has been accused of fraudulently tampering with their own economic data to make their country seem more well off than it actually is. China, I don't have a problem with China, but they are very closed off about the data that they share with the world. Things like Facebook are illegal there. They're a socialist government. So pretty much say what you will about that, but there are concerns for China. And if there are concerns for supposedly the strongest economy in the world, then there are concerns for the world. Now, there's a couple of other little things that I have done which are my own quirky little research thing. So here's what I did. I wanted to find out arguments for a 2018 global financial crisis, and I also wanted to find arguments against it. So this is what I did. Firstly, I Googled 2018 financial crisis, and obviously there was an abundance of information there on that. I'm not the only one that's concerned at the moment. It appears that a lot of people are. But then I started my quest on finding arguments against a 2018 financial crisis, and this is something that I implore you to do as well, because it's very interesting. Google "there will be no financial crisis in 2018" and have a look what shows up. Despite the fact that you are Googling "no financial crisis," out of the first 100 articles that pop up on Google, 97 of them all allude to the fact that they think there will be a financial crisis. So even when you try to find arguments against a financial crisis, 97% are suggesting that there will be one. I mean, everyone is starting to think that. And like I said at the start, I'm sorry. I'm sorry because maybe it's people like me that are starting to get concerned that create financial crashes, because people like us make people scared, and when you're scared, you decide to sell down your stocks. Just by selling down your stocks, you're decreasing the price of them, because the price of the stock is determined by market capitalization. By reducing market capitalization, so by taking your money out of that stock, you are therefore reducing the overall value of the company, and therefore reducing the overall value of the shares of that company. So please don't go out and sell stuff based on what I'm telling you right now, because all I'm saying is that I'm starting to get a little bit scared, and I want to do some more research. And we're all human at the end of the day. It is normal to feel scared, but don't act on your fear. Research your fear. Research it, because knowledge is power, and you should only make decisions based on knowledge. And I'll finish this with just one last point. Does it feel like the government is starting to change their focus on fixing the economic position that we're in with wealth extraction as opposed to wealth accumulation? Does it feel like that every single new policy that politicians are trying to introduce, whether they're on the right or the left or the middle, that are all based on trying to increase taxes, their efforts are trying to increase revenue by way of extracting it from the people? You know, there appears to be more investment in infrastructure designed to, you know, make more money from parking fines. Those parking meters down the streets that are popping up everywhere with ridiculous $100 fines for being 2 minutes over your, you know, the allotted parking time. Just stuff like that. Is it just me, or do you feel it too? I feel that our government is shit scared about the state of the economy, and they're just trying to get as much money in, even if it's at the expense of their own people. And I'll finish that with that feeling, because, like I said, I'm getting a little bit scared, and if you are scared too, I want you to talk to me about it. Thank you.